Welcome back to the Dividend Diplomats YouTube channel, guys. It's your boys, Bert and Lanny, the best dividend investing channel out here on YouTube. Yeah, I said it. You just bring it. And today we're talking about three stocks this guy is watching in November right now of 2023. Couple positions here I've been trying to close out, aka get to a full position. And another one I just want to build because they're good old reliable, a dividend king.
Mhm. Before we talk about Lanny's three stocks to buy, smash that subscribe button. Give this video a thumbs up. Help your boys grow that YouTube channel. DZ, go right down there. Hit that subscribe button. Then when you're scrolling back up, give the video a nice thumbs up here. We appreciate it. And also stop at the swag store for that beautiful stocking stuffer for the great holiday season that's coming around the corner.
All right, guys, we are back bringing you three dividend stocks, guys. Right now, the stock market has been on a surge again over the last week or so, up 5, 6%, still roaring up over 10% year to date, Bert. We had a lot of opportunities. If you haven't caught our video, definitely take a look at our Monday quick pick stock picks from your DD boys here. But we also came out with a nice video talking about time in the market. Don't do it. It's not going to work because you could have
Forget
just
about it. Yeah.
forget about it. You could have missed on a lot of good prices.
Yes, that's absolutely right. But whether the market's up, whether the market's down, we are always looking for stocks to buy. Just because we had one good week doesn't mean we are going to stop buying and stop adding to our portfolio. If anything, that's going to make us look even harder at the market to find other great companies that are at a discount. And in that timing of the market video, we talked about the importance of having your metrics set, having a formula, having a very structured way to find these stocks so you know when it's in your buy zone. And Lanny, how do we know stocks are in our buy zone?
When we crush a couple of natty daddies and you wake up and you bought some stock. No, I'm kidding, guys. The Dividend Diplomats stock screener focused on those three metrics. One, that price to earnings ratio less than the S&P 500. Two, that dividend payout ratio less than 60%. And third, that history of growing dividends, hopefully at a rate that's above inflation. Obviously, a very tough feat over the last, 12 to 24 months. And then we look at the bonus metric, the dividend yield, Bert.
Woo! All right. Let's jump right in here, Chico. Let's talk about that first company here. You want to kick off your watch list in style, Lanny?
You saying that just makes me have that Hulk Hogan theme music of, you know, I'm a real American hero, just, playing right now. Just need that music going here because, guys, we're talking about Main Street Capital, ticker symbol Main. Bert, this is right up your alley with the ticker symbol matching the name.
I love
Um,
it.
but the stock price right now, as of November 5th, is $40.68. Right now, annualizing out the latest earnings release, they're looking at $3.96 in forward earnings just based off of the last quarter of 99 cents per share. P ratio is only 10 right now, very undervalued according to that metric.
Well, that's low. So let's check out that payout ratio. Their annual dividend is $2.82. That's a payout ratio of 71%, above our 60%. But for Maine, that's a very solid payout ratio based on the type of company they are and the sector they're in.
Being a business development company, their job is to extract as much in shareholder returns as possible, as much value as possible, and give back to the shareholders. They're not a REIT, but their business model is to make you, the shareholder, money. And that's exactly why they have a higher dividend payout ratio. But you know what the cool part is what about that dividend growth, Bert?
Well, that's not cool at all. Who likes dividend growth, Lanny? I know I don't. I
Uh,
mean, the last video was
I,
talking about Intel. Like, I mean, come on. We're talking about non-dividend growth stocks the last time. Why are we talking about them now?
Well, because they grow 12 straight years. Right now, the average rate's about 5%. I think this year it's over 6 to 7%. Not even factoring in special dividend payments. So a pretty decent dividend growth rate because of the current dividend yield that they have, Bert. And what's that yield right
Ooh,
now?
6.93%. That is absolutely beautiful.
Yeah.
So
So
you're
it's a very good match.
yeah, you're getting nice yield today, and you're also getting a strong growth rate there too. So 6.93% yield with a 5% growth rate. That doesn't even factor in those special dividends. So think about the return and the dividend factor you're getting here with Main Capital.
Yep. I mean, be aware of, possibly ordinary income taxes when it comes to the dividends you receive from Main Street. Just keep that in mind. Again,
Buzzkill.
yeah, the average dividend yield though is 7.5%. I'll have to actually do some more back testing on that metric, but they're actually yielding below that 5-year average. Why? Because, well, hey, this year they're actually up 10%. So that explains a lot. Last 52 weeks, they're still up 3%. So the stock is performing decent this year.
Yeah, so let's summarize here. 10.27 PE ratio, 71% payout ratio, 5% 5-year dividend growth rate without factoring in those special dividends, 12 years of increasing the dividend with a 6.93% dividend yield. Main Capital, everybody. That is first stock on this list. Lanny, tell us about number two.
Number two, guys. Now, again, I kind of did this in order of like, okay, how many shares do I own? I don't own as many Main Street Capital. I've been looking to really build it. That's why it's my big stock pick or stock that I'm watching, like the main one, the main stock. But going into number two, Bird, this is right out of your playbook. You and your wife own 100 shares plus each. I know you own way more than that now with a few quarters of dividend reinvestment under your belt. But Johnson and Johnson, the good old reliable J&J, the dividend king themselves on this watch list, mad because of the stock price that they are at, which is 150, 134. Because gosh dang it, they were just at 145.
I know Newman. But it's nice now to just look at Johnson and Johnson without any noise surrounding them. We don't have to hear about the potential split off anymore. You don't have to hear about that. You're not wondering how many shares you're getting in the conversion. You're not wondering what the cash flows are going to be like after it. The transaction was completed in Q3. You've seen the earnings. It finally feels like Johnson and Johnson is at least on stable footing, and you're evaluating what you're going to be seeing with the company going forward.
No downside to the dividend. They're keeping the dividend, kind of like Pfizer did with Viatris.
Mm-hmm.
Projected earnings are $10.23. That's a price to earnings at 14.79. They pay a nice, healthy $1.19 per share per quarter dividend or $4.76. That dividend payout ratio is also in Bert's perfect payout ratio range of 40 to 60%. They're right at 46%. B.
Yeah, so their 5-year dividend growth rate is 5.92%. They've increased for 60 years. That's always right smack in Johnson & Johnson's range. In fact, that's why we call them good old reliable. They always have a reliable 6 to 8% annual dividend increase, and they continue to hit that average right there with a nice 5.92% 5-year DGR.
Yeah. 60 plus years, dividend king, now yielding 3.15%, almost 40 basis points higher than that 5-year dividend yield average of 2.76%. Why? Stock price is down 15% this year, down 12.5% since last year. They've had a rough year, and it was looking a lot worse about a week and a half, 2 weeks ago. So I'm curious what they're going to do this week and into November of 2023 right now.
Yeah, so the PE ratio is 14.79, payouts 46%, 5.92% 5-year dividend growth rate increase for 60. Hear that, dividend king with a 3.15% dividend yield. Johnson & Johnson, everybody, thank you for stopping by the show here. Guest number 3 on Laney's Dividend Stock Watch List. What stock are we talking about, Chico?
Yep. Well, before we get there, 61 shares of J&J, guys. So I've got a smaller, I call it a smaller position, considering that we've been investing for so long, my wife and I. It's amazing. We only end up having 61 shares of J&J, so not close to the 100 share mark. Would be nice to get there someday. Let us know if you guys own Johnson & Johnson in your stock portfolio. Bert, yes, dividend stock number 3. Gosh, the stock's going to be the death of me. I'm so stubborn right now on this stock. We're talking about United Parcel Services. Ticker symbol is UPS. Man, this stock's down 18.5% this year. They were trading in the upper mid to, or low to mid 130s recently. I own 97 shares with the goal of 100 freaking shares. $142.86 the stock price is right now.
Yeah, I'm just smiling because you're making fun of yourself for how stubborn you are. So, hey, you're there. You're almost there. You're on the doorstep of getting to the 100. Let's see. We've talked about it a lot. We love UPS on this channel. It's a great company. It's a strong one for you to continue building and growing that position. So, this is fantastic that they slid into that third spot. Let's see how they slide through our metrics here, though. Their price is 142.86. Their forward earnings is 1034. That's a PE ratio of 13.82x.
Yeah, no, that's based off 2024 expectations as well, similar to J&J. Again, I know that they just closed on that 30 plus $billion labor union deal. So there's going to be a lot of moving and shaking, plus maybe a softer holiday season, maybe retail season coming up here. So just kind of keep that in mind. A lot of moving parts when it comes to logistics and delivery services with UPS. But Bert, what's that payout ratio now looking like?
Their annual dividend, $6.48. It's a 62.67% payout ratio. So just a little kiss right above the 60% mark there. Nothing too concerning, though.
Which kind of, dominoes into dividend growth. They've been doing dividend increases for 13 straight years, 6.41% on average. And because of that payout ratio and a lot of the increase in potential cost right now, I'm thinking dividend growth is going to be a little bit softer going forward, maybe into the low to mid single digits, probably that 3 to 6% range.
I would agree. I think that's fair. Amongst everything else. So let's look at that yield, though. That yield, whew, 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 that yield, 4.54%. They are over 4.5% for UPS. Just blows their 5-year average yield of 3.38% out of the water. It's not even close. It's over. It's that Vince Carter. It's over. It's over.
Man, so yeah, the yield has definitely swelled up, obviously, because of the additional risk of owning UPS right now. I know there's a lot of discussions and arguments about, no, Amazon will take them out, or Tesla will think of a new automated shipping model where just machines will deliver items. Well, you better hope and know that management's probably trying to figure that
Yeah.
out as well.
And I would
Um,
think Tesla should focus on getting their own truck down first before they start messing around and focusing on other things. But that's a story for a different day.
Yeah, so again, quickly through the metrics, below 14 PE, 62 to 63% payout ratio, 6.41% dividend growth, 13 straight years of growing dividends, a 4.54% dividend yield, 116 basis points higher than the 5-year average, down 18.5%. I own 97 shares, guys. Do you own UPS? Let me know in those comments.
So here's the question, Lanny. Rank them 1, 2, 3, or is it a 1A, 1B, 1C?
Oh,
Let the viewers know what you're thinking and what your strategy is about to be for these three stocks.
so Maine, I got to see it below 40, preferably in that mid to upper 39s. If you haven't caught the Monday video, I mean, there's like, hey, this is the stock price targets, and I'm not going to be timing the market saying, oh, man, it might go lower, even though it's at my target. I'm done playing the game. The game. So I would love to buy more Maine first, unfortunately,
Okay,
because UPS's dividend will probably get me to 100 shares soon.
that's fair.
Um, give it a couple quarters. But J&J, I would love to see them. I'm probably not going to see them at 145, but I would love to see them crack below 150. Is that too much to ask? Is that too much to ask?
145 is not out of the equation either. It's not that far from 145.
But then UPS, honestly, it's just 140. I'm not asking for 133, 134, 135. Give me just a couple bucks. Just throw your buddy a couple bucks over here.
Yeah. All right. So there you have it. The Main Capital, Johnson and Johnson. Those are the three companies on Lanny's watch list. What are the three stocks on your watch list? What stocks are you going to be keeping an eye on going forward? And what positions do you want to get to 100 shares as fast as you can? Because that's what Lanny's hyped up on as he's talking about these three companies.
Yeah, and obviously Bert and I, we like to strive for the 100 shares because it at least gives you the option to write options on those shares of stock to generate more of a total return. Bert and I will have more videos on that coming out. We're very much beginner. We keep it very safe because we're just trying to generate a little bit extra yield.
Yes,
Um,
I'm a noob when it comes to this, so got to watch.
but guys, um, No, I didn't mean to interrupt you, Bert.
Well, I interrupted you here. So that's really what it's about. It's about investing. It's about moving your cash from the sidelines into the market, growing your passive income, building that second income stream that does the work for you so you don't have to do all the work. That's what
That
it's
is what it's about. You're 100% right, guys. Get that passive income stream flowing, build it. It's easy. It's about dividend investing here. We keep it as simple as possible. Hopefully, like this video, subscribe. Let me know what stocks you're buying, what you think of these three stocks. And Bert, you're either with us or you're against us, Jack. That was Bert, the Hurt, and Lanny from the Dividend Diplomats. Over and out.